Watch this closely because this is exactly how you catch a perfect trade. Right here, I entered a sell on volatility 100 index. No indicators, no guessing, just pure price action. And in a moment, you will see how it played out exactly as predicted. But first, let me break down every detail so that you can do this too. What's up, traders? It's your boy Edson back with another real trading breakdown. No fluff, just straight up price action. This trade was clean, precise, and a perfect example of how simple trading can be when you finally understand the market structure concepts. Today, I will walk you through the following. First, why I knew this was a high probability selling setup. Secondly, we are going to see my exact entry confirmation that made me finally pull the trigger. Thirdly, we are going to see how I manage my risk and secured profits like a pro. And most importantly, how you can apply this to your own trading. You have to understand this trade followed the same price action principles that I always teach. No magic, just logic. So let's break down this step by step. First of all, you have to understand we as day traders, we always do our analysis starting on the highest time frame. Some day traders, they can start doing the analysis on the weekly. Some can start doing the analysis on the 12 hours. But for me personally, according to my own trading style, that I think you should also follow is you should just start on the daily time frame. Why? Because you are a day trader. It just makes sense for you to start on the daily time frame. The information that we're supposed to see on the daily time frame is the general market bias. All right, we need to see, okay, what the big banks or the institutional traders they are putting their money on, and we can see that these traders were putting their money for buying position. You can see this market had been moving, providing you with series of higher highs and higher lows. This, guys and girls, is a typical way of how the uptrend market is supposed to move. All right. So the first information that we got as day traders is okay, this market is moving on an uptrend direction. All right. Now, there's this concept that most of traders, especially the beginners traders, that they normally confuse because they will find a statement that says, always ride the trend. So those beginner traders, since they have finally understood the direction of this market, that it is moving on an upturn direction, they will be just eager or they will be just looking for buying positions. Now you have to understand this, that concept, it is very strong. We should not ignore that concept of riding the trend, but we should see accordingly to the time frame that you are. If you are moving on the daily time frame, that concept can work against you and can work for you. But if you are on the lower time frame, all right, in corresponding to time frame coordination, or in corresponding to the information that you will see on the daily time frame, that statement can be very powerful and can make you a lot of money. So we as day traders, since this market is moving on an uptrend direction, and we can see that this market, as it was breaking the structural levels, the market was coming to retest inside these areas of liquidity before playing out. You can see right here, after the market broke this structure right here, it came inside the areas of liquidity before breaking another structural level right here. So we said to ourselves, since this market always comes to our areas of liquidity, then it makes sense for this market to come to the daily areas of liquidity before actually playing out. So we know, all right, the second information that we know, the market has to go to the daily liquidity area. Now, here comes the logical part. You already know the direction of the market. Are you just going to sit idle, waiting for all this money to pass through you, eh, without taking any trades? You can see here it is almost 3,000 points. This, guys and girls, is a lot of money, especially to volatility 100 index. All right, so since we refuse to stay idle, since we already know where the market is going, why not? Why not assisting, or why not going with the flow until the market reaches the area that we are targeting? So we said, okay, we are going to the 1 hour time frame to see if we will get a proper trend continuation. Now here, you have to understand my area statement. Like on the lower time frame, riding with a trend, it is very important if you correspond it with the daily or the highest time frame that we will choose. It can be the weekly, it can be the 12 hours time frame, whatever time frame that you choose. So on the 1 hour time frame right here, we can see how this market was beautifully moving. You can see the trend was already broken. This uptrend direction was already broken right here, and the market started to move in series of lower lows and lower highs. Just a typical way of how the downtrend market is supposed to move. So you can see right here, after the market broke this structure right here, what it did, it came to the 1 hour areas of liquidity, and at this point right here to retest to this point right here. You can see the market came to retest to these areas of liquidity right here, okay, before it paid out. But on the trade that you can see on the MetaTrader 5, we did take this trade based on this candlestick right here. This was my entry confirmation. Why? Because this is a doji candlestick. Let me zoom in a little bit so that you can see perfectly this doji candlestick right here. So I'm sure you know how powerful a doji candlestick is. A doji candlestick is a very powerful continuation pattern, and it is a very powerful trend reversal patterns, especially when it occurs on the zones. Let it be a support zone, let it be a resistance zone. All right, do you get this concept? It can act as a continuation if it occurs in areas where it has no zone. All right, let's say this is how the market is moving. All right, and you find a doji candlestick to an area like this at this point right here. No any support, no any resistance, just a random doji candlestick. For these cases, the doji candlestick can act as your continuation pattern. Now, guys and girls, after getting this our entry confirmation, we said, okay, we are entering this trade at this point right here, exactly where after this doji candlestick is, and our stop loss aiming for these weak rejections just slightly above, because in the market, sometimes those guys who move the market, the institutional traders, they can't decide to play dirty. I'm sure you've heard the concept of liquidity grab or the concept of liquidity sweep. All right. So in order to be safe, we said, okay, our stop loss is going to be above, just slightly above this zone right here on this weak rejection. So some can ask, sir, okay, we have already identified our risk. How can we predict our take profits? Let me tell you, there is no perfect system for taking profits. You as a trader, you will always leave money on the table. Sometimes the trade will go back to your entry and leave you frustrated. And you start to blame yourself, okay, I wish I could have taken those profits sooner. Sometimes you will take your profit sooner and the trade will go to sell for weeks to come. And you just say, oh my God, why did I exit sooner? All right. So I'm going to explain to you here my taking profit strategy. First of all, I look for major areas of support if I'm selling and major areas of resistance if I'm buying. Why? Because we know on a support level, the market is likely to bounce. Most of the books, they say buy on a support, sell on a resistance. So it is only logical for you to go with that concept like, okay, most say that we are going to buy on a support level. So it is only logical for you to take some profits when the market comes to those levels, because you do not know what will happen. The market might decide to actually respect those levels, or it might break. The key word here is you may never know. So you need to develop first a system. Some traders that I know, they choose to be trailing their stop loss because, okay, they know where this market is going. Let's say it has already started to move in series of low lows and low highs. What they will do is they will just be trailing their stop loss. They will just be moving their stop loss, aiming for this swing high right here. Okay, that's their way of trading. But my way of trading is aiming for the major areas of support or resistance as my take profits. So let's say on this trade, I opened around 5 position. At this major support level, half of my positions are locked and half of my positions have already been closed. Guys and girls, if you found this breakdown very helpful, please take this moment to like this video, subscribe, and turn on the notifications so that you may never miss another high probability trading setup video where I'll be explaining my strategy in the most simplest way so that you can understand. And if you want real-time insights, some trading ideas, and more price action strategies, please join my Telegram group. The link is in the description. Thank you for watching, and until next time, happy trading and bye bye.